Hi, welcome to Accounting Play. Today we're talking about assets. There's a reason why I got these pinky rings on for you today, and I have this cash, because these are all assets. So we're going to talk about debits and credits, all about assets. I'm going to go ahead and set my cash aside there. Right? Assets are things that are valuable to a business. They're not an expense. So we're going to go ahead and talk about various kinds of assets, asset transactions, utilizing our ebook here, Learn Debits and Credits. If you don't have the ebook, just follow along. And let's go ahead and get right into Excel, where I'm going to be doing the presentation. So don't worry about the Excel part, but just worry about how assets go up and down. Assets increase with a debit. Now this is something that I just can't stress enough. Increase cash with a debit. Debit cash up. Now, I know what you're thinking, and I've been there before. You say, oh, a debit card at a bank. That doesn't make sense because at a bank, account credits mean cash up. So it's actually a flip of that. So debit cash up, debit cash up, debit cash up. Okay, if you know to do that, it's a great place to start. So now we're going to talk about T accounts. Debits on the left, credits on the right. Now, let's get into the software. Come on. Now, when I said software, I didn't really mean software. This is just Excel, all right? So I'm going to be walking through some of these cash T account transactions, some AR account transactions, and Contra accounts. So first, just go ahead and pull up my free ebook. This is at learndebitsandcredits.com, which will probably redirect you to accountingplay.com/downloads. Any problems, email me. And also, please subscribe. John at accountingplay.com. So this is your book. I'm sure you're probably familiar with it if you've been seeing some of my podcasts already, as well as my apps in the store. So just look for me. Right now we're talking about assets. All right? Assets increase with a debit, decrease with a credit. These are common assets: cash, AR, inventory, things that are valuable to the business. Now, I'm going to take one step up to this very famous diagram. Here we have our assets, liabilities, and equity. This is something to commit to memory, but I want to just introduce this T account. Debits on the left, credits on the right. Debit asset up, credit asset down. Debit asset up, credit asset down. Some assets are obvious, like cash. Accounts receivable, that is essentially when a company sends out the bills, sends out the product, and says, okay, you got your product in the mail, now pay me later. That's typically how businesses manage things. It's not an all cash basis type of thing. Inventory is an asset. Allowance for doubtful accounts is a contra asset, as is accumulated depreciation. Other common assets can be intangibles. And another contra asset can be accumulated amortization. So we just need to commit these to memory. Assets increase with a debit and decrease with a credit. Now let me show you how this looks in a T account. Here we have cash. On the left we have our debits, and on the right we have our credits. Debit cash up. You see here, I'm instructing increase 1,000. That's increasing cash. That's simple. Debit cash up. Credit cash down, 50. Debit cash up, credit cash down. Now, cash came in for 1,000 and cash came out for 50. So logically we know 1,000 minus 50 is 950. This is how this would be expressed in a T account. Don't worry about the Excel, but just the concept. The $950 would remain right there. The next transaction, decrease $300, credit 300. Let's go ahead and do all the rest. Increase with 10, decrease with 200. So now, starting with our ending balance of 950, we can start subtracting out the credits. 900 equals 950 minus 300 minus 200 plus 10 for an ending balance of $460 in cash. So I'm going to go ahead and check ourselves over here. If I increase 1,000, let me do this a little bit better. If I go ahead and increase 1,000 minus 50 minus 300 plus 10 minus 200, it's going to equal a balance of 460. There. Now, 460 here. Accounts receivable, let's just do it all at once. Increase 200, 200. Decrease 10, decrease 50, increase 100, decrease 5. So these transactions are accumulating here in the accounts. Another way to approach it is just add up the two. Okay. I'm just doing an alt sum function in Excel. Don't worry about that. You can do it manually. So here's the sum of these, and some of these. And now let's figure out what is remaining equals that minus that, 235. So if we did 200 minus 10 minus 50 plus 100 minus 5, it's going to equal 235. This is how assets are going up and down in the T accounts. Debit assets up, credit assets down. Debit assets up, credit assets down. Now, contra accounts, such as accumulated depreciation or allowance for doubtful accounts, are flip. Very confusing. So, in order for contra accounts, we must credit to increase. Precisely the opposite. So I'm just going to credit, credit, credit. So when starting out, don't worry about contra accounts, but just know that they exist. Your contra accounts are going to be accumulated depreciation, as well as allowance for doubtful accounts, and those are the two main. So you can go ahead and look those up in the Accounting Flashcards app for iOS or otherwise. That is a very brief intro into debit cash up, credit down, as you remember here. So that is a brief intro into asset accounts. Remember assets, cash, debit assets up, credit assets down. suspend your belief, and just start practicing with the 1T account. Debits on the left, credits on the right. We're going to run through some others. We're going to run through first the balance sheet accounts, assets, liabilities, and then equity. And just hopefully through just suspending your beliefs and understanding that you have to memorize some of this, you're going to do really well. Please go to accountingplay.com/downloads, as well as get the game in the App Store. Let me know how things go. Subscribe below, john@accountingplay.com. Thanks so much.